Here are the crypto top headlines covered in this video. SEC sues Consensys over MetaMask's brokerage and staking services. Next, 21Shares files application for spot Solana ETF. Also, Chainlink data streams go live on Avalanche network. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons, as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: SEC sues Consensys over MetaMask's brokerage and staking services. The U.S. SEC claims Consensys has been operating as an unregistered broker through MetaMask. The United States Securities and Exchange Commission has filed a lawsuit against Consensys, the parent company of MetaMask. According to a complaint on June 28th, the company has been operating as an unregistered broker and engaging in the unregistered offer and sale of securities through MetaMask swaps since 2020. The complaint claims that Consensys has collected more than $250 million in fees by brokering crypto asset transactions and offering staking services without proper registration, thereby depriving investors of crucial protections. The SEC seeks a permanent injunction, civil penalties, and other equitable relief against Consensys for these alleged violations of federal securities laws. Since January 2023, Consensys has engaged in the unregistered offer and sale of securities in the form of crypto asset staking programs and acted as an unregistered broker through its MetaMask staking service. By its conduct as an unregistered broker, Consensys has collected over $250 million in fees. In addition, the regulator claims that by facilitating investments in Lido and Rocket Pool's staking programs, Consensys has acted as an intermediary in unregistered transactions, denying investors essential protections. Consensys has offered and sold tens of thousands of securities for two issuers, Lido and Rocket Pool. By this conduct, Consensys acts as an underwriter of those securities and participates in the key points of their distribution, reads the filing. Consensys sued the SEC in April after receiving a Wells notice from the agency challenging potential attempts to classify Ether and related staking services as securities. The company said it fully expected the regulator to follow through on its investigation. The SEC has been pursuing an anti-crypto agenda led by ad hoc enforcement action. This is just the latest example of its regulatory overreach, a transparent attempt to redefine well-established legal standards and expand the SEC's jurisdiction via lawsuit. The company argues that the SEC has not been granted authority to regulate software interfaces like MetaMask. We will continue to vigorously pursue our case in Texas for ruling on these issues, Consensys said in a statement. SEC goes after staking. The SEC's complaint classifies staking programs offered by Lido and Rocket Pool as investment contracts, claiming investors involved in staking programs are investing Ether in a common enterprise with a reasonable expectation of profits. Neither Lido nor Rocket Pool has filed a registration statement with the SEC. The Lido and Rocket Pool staking programs are each offered and sold as investment contracts and therefore securities. Specifically, as described in more detail below, investors make an investment of ETH in a common enterprise with a reasonable expectation of profits from the managerial efforts of Lido and Rocket Pool, respectively. The SEC argues that by facilitating these staking programs through its MetaMask platform, Consensys has acted as an unregistered broker and underwriter. Staking service providers have been sued by the agency before. In February, Kraken Crypto Exchange settled with the SEC for $30 million and closed its staking services for U.S. clients following a suit. Another company on the regulator's radar is Coinbase. The exchange has been disputing the claims of the agency regarding staking as a security in the courts. Staking involves locking cryptocurrencies in a digital wallet to support a blockchain network's security and operations. Based on their staked amount, validators confirm transactions and create new blocks, earning rewards in return. The rewards provide stakers with passive income. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, 21Shares files application for spot Solana ETF. The proposed fund would be called the 21Shares Core Solana ETF and would not participate in staking SOL. 21Shares filed an S-1 application with the United States Securities and Exchange Commission for a spot Solana exchange-traded fund on June 28th. The fund will be called the 21Shares Core Solana ETF. This is the second application the SEC has received for a spot SOL ETF following VanEck's filing on June 27th. The proposed ETF will trade on the CBOE BZX exchange. Coinbase will serve as the custodian for the fund's Solana holdings, which will be insured privately. The fund's assets will be held in segregated wallets on the Solana blockchain. The fund will not participate in validating or staking SOL. The intraday value of shares will be calculated every 15 seconds. The value of SOL in the fund will be determined daily at 4:00 p.m. Eastern Time. 21Shares is a crypto ETF pioneer. 21Shares is a crypto-native financial technology company headquartered in Zurich, Switzerland. It already offers future Ether and spot and future Bitcoin ETFs in the United States in partnership with ARK Invest. In addition, 21Shares and ARK Invest offer an ETF investing in BTC and ETH futures and public equities of companies engaged in the blockchain industry and digital economy. The price of SOL rose rapidly from $139 to $150 on the recent news of VanEck filing. It traded around $141 at 12:00 p.m. Eastern Time, according to CoinMarketCap. 21Shares ETFs have a complicated history. 21Shares applied for a spot ETH ETF on May 31st, called the 21Shares Core Ethereum ETF, after ARK Invest ended its partnership with the company for that application. The ARK 21Shares Spot ETH ETF 19B-4 filing was approved by the SEC on May 23rd. The SEC approves S1 filings separately after 19B-4 filings. The partners had originally planned to offer an ETH ETF with staking but changed their plans. SOL is the fifth largest crypto by market cap. The Solana blockchain has been criticized for frequent outages and slow processing when congested. Our next top headline, Chainlink data streams go live on Avalanche network. GMX, a perpetual futures trading platform, will be a launch partner and leverage Chainlink's tech to fuel the decentralized futures exchange. Oracle Network, Chainlink, has launched its data streams product on the Avalanche network. GMX, a decentralized perpetual futures trading platform, has taken the lead by using the real-world market data provided by data streams to power its perpetual futures protocol. Chainlink's data streams differ from its traditional push-based oracles, which obtain and verify data on-chain at regular intervals or when certain thresholds and parameters are met. Instead, data streams relies on a pull-based oracle model that retrieves off-chain market data on demand with low latency. This is especially useful for perpetual futures platforms like GMX, where traders require access to raw, high-frequency price data in real time and cannot wait for on-chain verification each time the data is needed. Chainlink's data streams still verify the data on-chain, but only when necessity calls for on-chain verification, like the actual execution of a trade. In the wake of the Chainlink data streams deployment on the Avalanche network, Johan Eid, Chief Business Officer at Chainlink Labs, said, "By offering unmatched speed and resiliency, data streams enable DeFi protocols to provide ultra-fast, high-throughput DeFi products while maintaining the high-security guarantees of on-chain finance." Chainlink makes strides in 2024. Chainlink continues to deploy its products across the blockchain landscape. In May, the Oracle provider announced an integration with Celo to provide users of the Ethereum Layer 2 network with Chainlink's CCIP interoperability protocol. More recently, Chainlink's automation features and CCIP protocol went live on the Genesis network, allowing users to offload heavy computing tasks to the Chainlink network, potentially reducing gas fees up to 90%. Tokenization of hard assets. Earlier in 2024, Chainlink announced a partnership with Arta TechFin, a Hong Kong-based asset management firm, to tokenize real estate, a notoriously illiquid asset class. Tokenizing real estate would drastically overhaul the buying and selling of property, drastically lowering transaction costs and unlocking liquidity encumbered in these hard assets. Such efficiencies are attractive to institutional and individual investors alike, Kunal Bahasan of KPMG Canada explained. Moreover, tokenization of real estate could democratize commercial real estate, allowing smaller players to participate in the commercial real estate sector, traditionally available to large investors. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.